Welcome back to TechKidFX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which at the time of this recording has lost a key area of support at around the $124.9 mark. We also lost the 20-day MA here on the 4-hour chart, which is now acting as resistance, and after losing those key areas of support, we have made one more new low here at around the $119.4 mark. We have also continued to obey the Elliot structures, where I still believe that whatever we are seeing here on the charts is a corrective structure in the formation of these larger Elliott wave count 2. And before I get further into the technical analysis and also give you my next price targets here on the Quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you the short-term scenarios that I'm expecting to play out here on the Quant chart, where you can see that after making a low at around the $94.4 mark, we started this massive bounce to the upside, obeying the Elliott structures, where you can see that we have this 1-2 setup, and after seeing the 1-2 setup, we started another move to the upside, obeying the Elliott structures, where you can see that I have this Elliott structure in yellow, having the first wave giving us a peak at around the $165.5 mark. And after seeing the high for that wave 1, whatever we expected next is a corrective structure in the formation of these wave 2, and using the Fibonacci, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.78, which is a target area that lies between the $133.6 mark and the $115.2 mark, and it is within this right target area that I'm expecting to see the low for this second wave to the lower side. And in the formation of that wave 2, which is a corrective wave, I'm also expecting to see an ABC corrective structure also play out, and you can see that we are seeing this ABC corrective structure having this as the wave A, then a wave B giving us a peak at around the $148.2 mark, and whatever we are seeing at the moment is that formation of that wave C to the lower side, where I'm expecting that wave C to fully maximize our red target area. And once we fully maximize our red target area, then we can expect another explosive move to the upper side in the formation of this wave 3, and also give us a break above other key areas of resistances in between for us to fully maximize our target areas, and getting to the formation of this wave 2, which we have chances of still making one more new low in the formation of this ABC corrective structure, which can happen very soon in case we continue gearing up and also try to face our next key area of resistance at around the $124.9 marking. So in case we are unable to break above that key area of resistance, then I'll be expecting a bit of a pullback over here to fully maximize our target area, and once we fully maximize that target area, then we can expect our massive bounce to the upside in the formation of that larger Elliott wave count 3. But you also need to be prepared for a worst case scenario, where in case we manage to lose, that is break out of this target area, that is lose the fib level 0.78 and also lose the fib level 0.88, maybe also lose our next key area of support at around the 110.9 and continue pushing even lower, then that would be suggesting a different Elliott wave count here on the Quant chart. And getting to that different Elliott wave count that I'm talking about, I can first give you the long-term scenarios that I'm expecting to play out, where you can see that Quant, after seeing the bear market low, we started this massive bounce to the upside, obeying the Elliott wave structures, where you can see that I have this Elliott wave structure in blue, having the wave 5 giving us a peak at around the $229 mark, and also completing the formation of a larger Elliott wave count 1 to the upside. And after seeing the high for that larger Elliott wave count 1, we expected a corrective structure in the formation of a larger Elliott wave count 2, and in the formation of that larger Elliott wave count 2, which is a corrective wave, we also expected to see an ABC corrective structure over here, which we have seen over here giving us a low at around the $94.4 mark, and there are chances that that might be the low for that higher Elliott wave count 2. But in case the breakdown over here continues, we lose other key areas of support, maybe get to the area at around the $100.3 mark and also lose that key area of support, and maybe make one more new low, then that would be suggesting that the low for this higher Elliott wave count 2 is not in, and whatever we are seeing over here is just an ABC corrective structure, where we can have this as the wave A, then a wave B, then we can expect one more leg down in the formation of that wave C to fully maximize the formation of these larger Elliott wave count 2. And in case such a move plays out, once we get the new low, we can sketch out a new target area to the upper side in the formation of that larger Elliott wave count 3. But as long as we are holding within our red support zone, which is between the fib level 0.5 and the fib level 0.78, that is in the formation of this wave 2, then there are chances that soon we are going to see the reversal once we fully maximize our target area, continue gearing up in what could be the start of the formation of these larger Elliott wave count 3. And that's the reason as to why you can see that I have these microwaves within the formation of that higher Elliott wave count 3 because of its impulsive nature, and sketching out a minimum target area to the upper side, assuming that we have seen the low for this higher Elliott wave count 2 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that higher Elliott wave count 3 at the fib level 1.618, and that is at around the $397.7 mark, and that is the minimum that we can expect Quant to do on the long term scenarios. And also taking a look at the MACD, that is the indicators here on the RSI, we are trading at around the 39 mark, meaning we have a bit of room for us to fully support lower prices to fully maximize our red target area. Also taking a look at the MACD, we have been able to print a bearish cross, fully supporting that there are chances of seeing further breakdown to the lower side to fully maximize our red target area in the formation of that wave 2. So let's be patient and see how that plays out, and I'll be keeping you updated.